Hi, I'm Judy Copenbarger. Welcome back. Today we're going to break down the pros and cons of real estate versus stocks so you can make sure that you're on the right track to making investments that are just right for you. So what's it going to be? Real estate or stock? Historically, in a lot of areas, real estate has given better returns than equities. And equity is an ownership of stock. It's when you own something. But I'm not going to leave you with just assumptions today. Let's talk about the factors of each investment. We'll start with real estate. Initially, you're looking for a larger investment up front with real estate, unlike stocks, which you can squirrel away extra cash into every month. The trade-off is that you can leverage your money to purchase something worth much, much more sooner. Your down payment is going towards a property worth potentially up to 5 times your initial investment. So keep in mind, as you also pay a mortgage over time, there's property taxes, there's utilities, and all those other costs that go into property ownership. Don't forget about those. The key here is twofold. You have the money that you make from the people that are renting from you, your tenants, and you also have the increase in value as housing adjusts with inflation. And as the market changes, housing tends to change with it. Rent goes up, and the property value also is appreciating. Real estate can also be less volatile. This means less risk, and risk is the first factor you should consider when you're choosing one investment over another. You could think about it like this. You may not be able to quickly turn around and sell your home, but the value of your property fluctuates much less than the stocks in your online portfolio. You own tangible property, and this gives you much more control. Hey, did I mention the tax benefits? Many of your costs of those investments in real estate can be deducted from your taxes, income taxes, during the course of your ownership. Once that mortgage is paid off, thanks to the lovely people who rent from you, your tenants, your returns can then skyrocket. Now, don't let me sell you that easily on the idea of real estate, because along with that property ownership, you're responsible for managing and maintaining your properties. So some management will even be required if you have a property manager that you've hired to do that. That's the person that gets the calls in the middle of the night for plumbing problems, to change out the garbage disposal, even if it's not you. Now, although it's not a hands-off investment, and it's often overlooked, there's a huge amount of research required to properly sign off and begin to pay for anything. So take your time. In summary, you will be investing more than just money in real estate. It takes time to make a good real estate decision and a bit of management along the way. But real estate has been proven in many areas and over many time frames to outperform stocks in the long run. And when you own real estate, you own something that could potentially pay off indefinitely. So Judy, why would I invest in stocks at all? Well, on this channel, I will always be an advocate for diversification of your investments. Owning only 1 or 2 types of investments will increase your risk should something happen to your individual property or even the market as a whole. For example, the housing market bubble in 2008, remember that? Well, with stocks, bonds, and ETFs, the lesson is the same. You should seek to invest diversely in each type of investment as well. Beyond the fact that stocks are an alternative investment to real estate, you'll also find that they have their appeal. Stocks have a higher risk in some regards, and that's the first thing to understand. You can look at the ups and downs of the market over time to see this could be true. The benefit of stocks is that they're easily invested in, with or without a certain minimum of money, and they're quickly purchased and redeemed. This is called liquidity. You can get your hands on that money. Rebalancing your portfolio and reinvesting dividends is painless. There are no tenants to talk to at 2 a.m. in the morning, and each company is managed by a CEO that takes care of things while you're actually sleeping. Some costs for you to consider are the potential losses when a company does not do well, and the capital gains that you pay when you make a profit from the sale or redemption of your stock shares. Hands off or hands on, the decision is less about which type of investment is better, but which one is better for you. A property will take more time and thought as well as an initial capitalization. You got to pay that down payment, and it could be a great choice if you're willing to do your research and manage your investments over time. You can start renting and paying off your mortgage right away. Over time, you'll have a constant inflow of cash that appreciates with the value of the market. Stocks are a great idea, especially if you want to invest right away and a hands-off approach. If you follow the principles of investing for the long term, you can watch their value grow over time, and then when you're ready, sell them off or reinvest in another area at a moment's notice. In the spirit of diversifying, consider both types of investments. Your wealth strategy is always dependent on your life goals, so start with this in mind to determine the strategy that will get you there. Which investment is better for your wealth strategy? Let me know in the comments below. Please like and subscribe to our channel if you love learning how to make your financial dreams a reality. And then don't forget to share this video with your friends who are curious about investing. That way, they can join us on this journey. As always, I'm Judy Copenbarger, and I'll see you next time. God bless.